Hello and welcome everyone. In this session, we're going to look at task 2 for 25 marks. In this question, you're going to look at few internal control issues. We're going to see how to prevent this internal control. And of course, we're going to look at a few more things regarding the fraud. So let's read this question for 25 marks, task 2. First, we're going to read the question. It said, this task is about the types of fraud in the workplace combined with ways in which it can be detected and prevented. So how are you going to find it out, detect it, and how are you going to prevent it? So what is the solution for that? This task contains part A to D. E Limited has warehouse across the country, but due to the geographical distance between them, it is impossible for the senior management team to count the inventory on a regular basis. However, as the warehouse staff have been with the business for some time, senior management know that they can be trusted. So we don't have to worry about the staff can be still the product stuff can be still the inventory. We don't have to worry about that because the staff can be trusted. E Limited warehouse have several deliveries and dispatch every day, and they are operational on 24-hour basis. Recently, the number of orders have increased substantially. The company holds an annual delivery contract with a national courier who collect goods from the unlocked delivery area of the warehouse. This is very important to understand. It's an unlocked delivery area of the warehouse. When you see the word unlocked, that means like the courier company can just go and collect. There is nothing locked. So of course, they can just collect it, and it is possible there is a theft of the inventory. Someone can took it or steal it. So this is one of the risks we can see so far here. This is the first thing we're going to look at. The next thing we are looking at, what is the implication? So this is relevant to the inventory, stock, and also here we can see there's a lack of physical control. Physical control represent where we keep the thing locked in a premises. So for example, if a security guard is there or we locked it with the key, so this sort of thing comes under the physical control. All customers are on a 30 days credit, so this gives time to sort out any issue such as a missing or damaged item. Regular stock takes are completed and adjustment to the inventory record are made. That means they do regular stock take. Stock take means they keep counting every single physical goods they have. Sometimes we have seen this thing on the Tesco or Sainsbury. What they do, they keep counting every single inventory they have. For example, they count the crepes, they count the chocolate, they count the cereal bar, they count everything to see how much is stock the system saying should have and how much actually they have. So when organization receive a delivery, they record in the system how much they received, and after that how much they sold. The difference should be in the warehouse or in the stock. So basically that's why they do the stock taking. An adjustment to the inventory records are made. So adjustment means, so for example, if there is any difference coming, for example, there is a 5 inventory damage or 5 inventory missing, so they do the adjustment so that they can keep the record up to date. This information can be viewed in the reference section to the right. So you can see we have a reference section. If you like to see it, you can always see it from there. Okay, so let's read the question. The first one is not very difficult. It's a complete the following statement. The above may result in the occurrence of inventory. So we understand is the occurrence of inventory, and that occur as a result of lack of control. Lack of control means lack of physical control. Then in order to address this risk, you need to implement a physical control. We have a segregation of duty and have authorization and approval process. Now physical control represent the security guard, or you have to keep the inventory in a locked area. That's why it's physical control. The segregation of duties is more relevant when someone authorize his work. For example, you are the one who in charge for the purchasing department, so you make order for everything, and at the end of the day you are the one who authorized the invoice. So for example, if you order something for yourself for your personal use, but you can authorize it because no one there to check, so segregation of duties is more relevant there. Then authorization and approval process, this is mainly how much you can authorize. For example, a A normal employee can authorize up to £100, but the manager can authorize up to £5,000. So this is the authorization limit, and the approval process, who will approval for what. So within all of this thing, the question said like the courier collected from the unlocked area. So physical control is more relevant here. As soon as possible, this will ensure that the impact of the impact on asset, because we have income, the inventory is not income, the inventory is not a liability, the inventory is asset, it will be minimized, so it will be reduced. So we want to make sure the inventory will be safe. For that reason, we want to put the physical control, that means a security guard, or keep the inventory in a locked area, so that there will be less impact on the asset. So that means it will be less stealed, or it will be less damaged, or there will be more control on it. So remember that inventory is always a link with the physical control, and it is a current asset on our financial statement. All right, let's move to the next one. That's not the difficult one anyway. The next one says Sarah Taylor, the operating director. So operation director is basically, she's in charge for everything on the operation, has taken the decision to sell directly to the public from the company warehouse. So maybe before they used to sell to the retailer, and the retailer sell to the directly to the public, but now they decide to sell directly to the public. So this is basically B2C. B2C means a business to the customer. Normally the business can do B2B, that is business to business, that means one business sell to another business, but it is also possible they can do B2C, that is business to customer directly. The warehouse have a space for the public to view the product in a small showroom with an unlocked office at the back. Again, it is unlocked. Remember that if it is unlocked, it is a weakness. So the public can come and view the product, and this is unlocked, so anyone can take it. So this is not safe. Although the showroom does not have dedicated staff, there is always a member of staff nearby to deal with the customer queries, as the staff are regularly moving item into the delivery area for collection. So there is no one delegated or only for that reason to show the customer, but there are some people who can answer the question. So the main thing here is the customer, they need to look the product by themselves. So this is open, they can come, they can just see by themselves, and there is a possibility they can steal it. Customer are left unattended to view the goods in their own time. It has been noted that there have been some theft and damage to the good, but management believe this is an acceptable level. So here is the question here, because if the customer even believe it is the management believe is an acceptable level, but we still need to see like how much is the acceptable level. But there is always some theft and damage to the goods. So if it is normal, for example, if it is 1% or less than 1%, so maybe the management will think it is acceptable level, but we don't know how much good has been stolen, so how much good has been theft. So we need to find it out. That the management believe this is an acceptable level, but they're thinking it is an acceptable level. A PDQ machine to take card payment has been put into the office. So this is the machine, the card machine, the machine used to take the payment from the customer and to give the refund. Iron Press, the warehouse manager, is expected to run the end of the day process each evening before he leaves. So normally what happened, the PDQ machine give a report for the whole day, how much sales we make, how much refund we make, how much is the total sales, how much was the credit card sale, how much was the debit card sale. Is give a report for everything. So the warehouse manager, he should run the process each evening before he leaves, but provided he has time, obviously all in instruction including override codes. So what happened, he don't do it. So provide that he has time, all in instructions including override code and cards are left with the machine to ensure that any member of the staff can access this if needed. So basically he left the machine open with the code, like if for example if someone need refund, if someone need to cancel a transaction, anyone can do it, because the code, the authorization code or the override code he give with that machine. So that is a big risk, because anyone can just like give a refund, unauthorized refund, or maybe incorrect refund, or maybe intentionally they want to refund someone or misuse the PDQ machine. That's a big risk here. So we have already two risks. The first one, the management said is the acceptable level, so there is a theft. We understand, like they left it unlocked area where the customer come and check by themselves, so they can steal it. So that's the first risk. The next risk we have here, the PDQ machine, so there could be unauthorized payment. So we need to find more risk from this question. A computer and the printer have also been installed to enable invoice to prepare and sales to be recorded. The computer is not password protected. Another risk, the computer has to be password protected. Why? Because the confidential information can be accessed by anyone. So this is the risk, and any member of the staff can raise sales invoice. So you can see here, this is another problem. So any member of the staff can raise the sales invoice, and of course they can add any bank detail to get some benefit, or they can do something, or they can have access to the confidential information when required. As there are no network point in the office, so they have no network point in the office, so they don't have a server, a weekly backup of the data is done using an external hard drive. So they keep a backup on the USB, which is sent to the head office. So you can understand that's a risk. If the backup is if they lost the USB or the hard drive, or for some reason if the hard drive doesn't work anymore, so they'll lose every single data they have. So they don't have any cloud system, they don't have any drive where they can save the data safely. So they don't have a cloud accounting, they don't have a cloud saving. So this is a big risk for them. All right, now we can see the requirement is to identify 4 weaknesses in the system that may result in fraud occurring. So when you read this question, make sure you read the requirement first. So if you read the requirement first, you know actually what you're looking for. So the first one, they said identify 4 risks. So 4 risks will give us 4 marks. Recommend an internal control for each weakness. So basically the weakness we're finding, identify 4 weakness. So based on 4 weakness, what should be the control in place? So I will say, like for example, the inventory or the product left unattended for the customers, anyone can steal. That's the weakness. And what could be the internal control here? So it should be someone there. So this is the internal control, and give a reason why it will help prevent the fraud. So if someone is there, no one can steal it. So you have to answer 3 questions here. First, the weakness, and what is the internal control, and how this internal control will prevent this weakness. So basically I'm telling here what is the problem, number 1, then what could be the solution of this problem, number 2, and how this solution will help to not happening this weakness again. So this is 3. So you have to write 3 things for each weakness. So from the question so far we have seen our story. So far we have seen like the first weakness. We can see we have here the first one, customer is left unattended. So you can say customer left unattended. This is the first one. And then we have the next one, PDQ machine. So all instruction include override. So this is another one. And then we have the computer is not password protected, and any member of the staff can raise the invoice, so the invoice can be wrong as well. So we have 4. They're asking for 4. We can find 4. I think it's quite easy. Let's start that. So all we have to do, we have to find it out, all this weakness, and write why it is a weakness and how we're going to solve this weakness. That's it. Okay. So let's start with the first one. The first one, you're going to say the member of the staff should be with that. So unattended view of the goods. If you want to write in a different way, you can write it, but even if you write exactly the same we have in the question, you will get the full marks for that. So you say the weakness unattended to view the goods in the showroom. If you like to write very easy way, you can write very normal word. You can say no one with the customer when they view the goods. You really don't have to use very hard English. You can use very normal way. As long as the examiner understand it, you'll get the full marks for that. So this is my weakness. So when the customer view the product, no one is there. So that's my weakness. So what could be my solution? What will be the internal control? So what sort of control I can in place? So I can put in place the control. We can put a security guard. So we can put a physical security, or we can put a security camera, or we can put a locked door. So we'll say physical security. Physical security should be in place. Or you can say keypad on the door. Or someone always need to be there. Someone always need to be there. So basically we are telling what sort of internal control they can put in place. And the next thing we're going to say how this control will solve the problem. So this is my control. That one was the weakness. And how this control will solve this problem, what type of help it will do. We'll say prevent the theft or damage to inventory. So it will prevent to lost or damage inventories, because it is possible maybe the people don't take it, they don't steal it, but they might damage it, because if no one is there, they might broke it. This is my first weakness, then the internal control and the prevention. So every single weakness you have to write 3. The next one we'll talk about the PDQ machine. As we said, the PDQ machine have some problem because the warehouse manager, he left this PDQ machine with the authorization code, so anyone can authorize it. So this is not very good. So obviously that's a weakness. So no control over the use of PDQ machine. So no control procedure over the use of PDQ machine, because anyone can use it. There is no control procedure or policy. So what should be the internal control? So what will be the ideal to have some control on it? So we can say staff member login need to use the PDQ machine. Also, we can say only the authorized staff can have access. Only authorized staff can have access. That will also help, because if anyone can use it, of course, like there will be misuse for that. So this is the next thing. And the next thing we can say, what will help if we put this control, how it will be helpful for the company. So if we put this internal control, of course, like no one will be able to refund, or there will be no misuse of PDQ machine. For example, no unauthorized refunds, because the PDQ machine used to give the refund to the customer. So we have now two weakness, and with the two weakness we have two control, and how to prevent, how it will help, how this internal control will help to prevent this problem. All right, let's move to the next one then. The next one we're going to look at number 3. So we move to our weakness number 3 and 4. Okay, weakness number 3, we're going to write our next point. The next point was a lack of security over the PC or on the computer. So we can say no password or PC is not password protected. PC is not password protected. If the computer is not password protected, it is a weakness for us. So because of that, what sort of control we can put? We can use the password. So we said PC should be password protected. PC should be password protected. All right, and how it will help to solve the weakness? We said like no password, and the PC is not password protected. So this one basically we need to say a little bit more, because how it will help, before we said that, we need to say what is the weakness, because PC is not password protected. Yes, this is a weakness, but we can say a little bit more. PC is not password protected, and possible unauthorized access, because we want to say how it will help if we put the password. So we'll say stop unauthorized access. So if I put the password, it will stop the unauthorized access. The next one we're going to say about the invoice. They said anyone can raise the invoice. So we say invoice is raised by untrained staff. Untrained staff or unauthorized staff, because in the question they said anyone can raise the invoice to the customer, so that's a big risk. So what the internal control, what sort of control you can put in place? We can say only the authorized person need to issue the invoice, or only the trained employee, who is of course in charge for raising the invoice, only the trained employee should raise the invoice. And how it will help? It will help us to stop occurring the mistake. For example, the invoice will be accurate. So we'll say ensure the accurate invoice will be sent to the customer, because if you send the wrong amount to the customer, they will not be happy. Alright, so that's it for our weakness and what sort of control we can put in place and how this control will help. So you can see you just need to write one line for each of this and you will get the full marks for that. Okay, let's move on to our next one. The next one we're looking at here, task C, and here it says you work as a part of accounts department. As part of your AAT studies, you learn how to produce a fraud matrix, and you are keen to put this technique into practice. You have identified a number of areas where you feel that fraud may be possible. They are described below and you need to complete the fraud matrix. So you need to complete the fraud matrix. Identify the appropriate rating for each of the situation given below. So you need to look at, before you start, let's talk a little bit about it. So basically, when you have a fraud matrix, we need to see, based on the situation, what type of risk we have. For example, if we find it out the risk is higher, then we say high risk. If the risk is lower, then we say low risk. And if the risk is medium, then we'll say the medium risk. Now, after reading the situation, we will know what type of risk it is. So we need to read the fraud matrix template or the table to understand it more. So from your study, from the book, you can read it. But for the time being, you understand if there is a possibility of high risk, then you have to make a rating for high. If there is a chances of happening this risk is medium, then it's medium rating or low rating. So we need to understand like what is the possibility of happening this risk, number one, and what sort of a damage, how significant it is. So if there is a big impact because of this risk, so we need to make a rating high, because we need to solve this one first, then the next one, then the next one. Okay, let's read this one. So it says the situation: when the business first opened, it was decided that it was unnecessary to implement a formal system for ordering raw material. Since then, the business has increased turnover by more than 150% and has recently reviewed and updated the system to ensure that a full process for authorization now in place. So they are now 100% up to date and they are following the authorization process, and everything is on now in place. So you understand, if everything is on place, there is a less chances like the fraud could happen. So when there is a less chances the fraud could happen, that means we can put as a low risk. So you say this is a low risk because the chances of fraud is a low here. The next one is says you are reviewing the payroll system and discover that the system is backed up at the end of the month to an on-site server. You have a high turnover of his staff. High turnover means like every month the new staff join and all the staff left. So do not always complete pre-employment new starter check. That means like when the new employee join, you have to have some check. For example, the identity check, their physical identity, their bank detail, their national insurance number. So this sort of check done by the HR department. So as the employee staff turnover is very high, that means every month or maybe every 2 weeks there is a new employee, so you didn't do it properly. Not always complete the pre-employment new starter checks. The payroll is completed by the receptionist. So this is a very high risky. The payroll is complete by the receptionist, and also you don't check. So what could happen, maybe one person giving the paper but another person is working. So basically the person applying for the job, maybe he's not working, someone else is working. The payroll is completed by the receptionist and they have relevant knowledge and qualification to complete the work. So it is not the job for the receptionist, because if the person do both job and on the reception the computer is open, anyone can see the confidential information, because on the payroll you have the name, date of birth, everything is confidential. So this is a very high risky area of the fraud could happen. So also is a high risk. Training is a key priority for the business, with each department ensuring that they have a well-trained member of staff for each role. However, as cash flow is increasingly difficult, it was decided at this point it is unnecessary to have 2 members of staff trained for the same role. Now it is they are saying unnecessary, but sometimes it could be necessary, because for example, if there is a 2 member in the payroll department, it is possible 1 member can go for a holiday, and if the 1 member can go for a holiday, another member should carry on the work. Now if another member carry on the work, then if the person don't have enough training, they can make a mistake. Even though the person go for holiday for 4 weeks or 2 weeks, even that time the mistake could happen. For that reason, obviously, like, there is a little bit risk when the person is on holiday or sick or something happened, he's not in the work or not in the office, so there is a possibility that the fraud could happen during that time. But it is not that high, it is not that low, we can say it's a medium risk, because only if the person is not there, only that time the fraud could happen. So that's how we can find it out, the fraud matrix. So if there is a high risky, a low risky, or medium risk, we have to find it out based on the situation. All right, let's move to the next one. The next one we have here for 6 marks. So it says you have discussed the system of ordering and accepting good into the warehouse with and praise the warehouse manager, and you have identified the following risk with the system. There is no system to check and record item as they are received. So when they receive the item in the warehouse, there is nothing they can check how much they received, and there is no system that recorded how many product in today. They are left at the door of the warehouse. Often items are found to be damaged or missing. So even someone took it from the door, you will not know, because you don't know, you didn't record it. So this is a high risk. So what happening based on this situation? So we need to understand the situation. So there is no system to check and record. So there is 2 problems. There is no system, no one check, and there is no system to record as they have received. So when you receive the delivery, for example, the delivery driver come and drop everything, and you don't check it, you don't record it, and they are left at the door of the warehouse, and often the item are damaged or missing. Outline how you can monitor, review, and report on the risk described. So there is 3 things here. The first thing we have monitor, and the next thing we have here review and the report. So monitor, review, and report. So let's have a look. So we need to first on the risks described. So we already know the risk, and we have to say what it is. So we need to make some line here. The first one you're going to say about the risk. What is the risk here? And then we're going to say monitor. How can we monitor that? Monitor. Then we have to review. And after that we need to report. Report is the ordinary report that we generate for any accounting firm. For example, the profit and loss account is a report, the trial balance is a report. For example, receivables days period is a report. So any sort of report, or in a graph or in a table, that's the report. Like basically when you give a report to someone, how you give the report to them. Okay, so what is the risk here? The risk here we have here, deliveries could be inaccurate. So of course they can give the wrong delivery. So inaccurate delivery, or even the driver can give you the damage because you don't check. Damaged delivery. So inaccurate delivery or damaged delivery. As there is no system, as there are no system to check and record. Okay, now how I'm going to monitor this one? So I have to check, like I have to compare. So how much we ordered and how much we received. So compare between the ordered and actual received. Compare between these two. Then record the damaged goods separately. If there is a damaged, we have to record it separately. And also we have to see, is there any good theft after the delivery. So of course, like we need to see the potential theft of goods after delivery where delivery note does not match the good delivered. Now the delivery note is very important. When the driver bring the goods, so the driver said, can you check, and then they give you a paper. So the warehouse manager should accept that paper as a delivery note. Delivery note says how many product based on the different description, different name of the product, and how many quantity they received. So if we count and if we see like the delivery note is not matching with the actual delivered item, then there should be a theft. So goods theft if the delivery note does not match with delivered goods. So how much we received, if it doesn't match with the paper, that means something is stolen. Now this is the difference between the theft and the damage. So if the good is still there but it is damaged, but if the good is not there at all, that means it's stolen. Then how you review that? So again, check order, delivery note, and the invoice to obviously to check the remittance and the payment. So the review, I'll do the review. So I'll check the order, then I'll check the delivery note and invoice, because the three of this should match. How much I ordered, the same amount should be on the delivery note, and the same amount should be charged for the invoice. And also I want to check the remittance advice, that means how much I paid for that. Then also we need to check, is there any area then I need to improve. For example, we say internal audit. Internal audit means I'll check, is there any area still I need to improve. If I see is there any weakness, I have to improve that. And then I'll check the PO matched to the invoice in the accounts department. So PO, purchase order, match to invoice. And we can also check with the supplier if there is any inconsistency. So check with supplier for any difference. If it doesn't match, we can always check with our supplier. On the report section, we can always create a report based on whatever we have discussed. So we can produce a table, we can produce a chart. So produce table to show the difference of inventory lost or damaged. So you can show, like, for example, you can make a pie chart and we can say like damage percentage is 15% and loss percentage is 5%. So we can say like out of 100% delivery, so 80% is good, 15% is damage, 5% is lost. So you can make a table or anything to show like what is happening. Then we can see we can check, we can produce a report. So produce a chart or table, produce chart to show the difference between stock take report and actual inventory in the stock. So you can see when you count the physical inventory, how many was there and how much it should be. So we can see here the risk will be in the question, so we find the risk, and after that I'll check the monitor. So what's happening, so based on this risk I'll do the monitor. Monitor is like I'll compare how much order, how much received, then is there any goods damaged, is any good lost. That would be my monitoring. And after that I'll review. Review means I'll check the paperwork. So I'll check the delivery note, I'll check the invoice, I'll check how much I ordered, how much you received. So after that I'll prepare a report so that I can say like, okay, I have seen this risk, and based on this risk I have monitored and I have seen this thing, and I make the review, and that's the report for that. This question is very common in the exam, so make sure you practice enough so that you can answer all this question in the exam. All right, I think this is the end of our question number 2 for 25 marks. So on the next session I'll try to show maybe the question number 3. Thank you very much.